Morning, everybody. It is March 15th, 8:25 a.m. Another crazy morning, another crazy overnight in the markets. Volatility skyrocketing. Um, Lots to do with that is the Credit Suisse Bank. Um, Looks like a Fed rate hikes back on the table. It's just nuts. This market's nuts right now. It really is crazy. We got PPI coming out. I don't know how much with all the financial stuff going on that's gonna be in the focus, but it still could be. Okay. Um, let's look at the watch list real quick before that PPI comes out. We got the VIX up 15.97%. It's at 27.52. Okay. We got silver catching a bid. The dollar's up. Gold is up. Usually dollar doesn't go up and the silver doesn't go up, but it makes kind of sense now. People are flocking to the metals. Bonds are being bought. Okay. So crude is down 1.49%. All this financial fears is causing less demand for crude. Bitcoin's down 1.64%. ES down 1.72%. The Dow is down 1.73. The Russell getting decimated. Of course, regional banks again 2.69%. 10-year yields down 3%. Down to 3.5. Okay. Leaders and laggards. Okay, so the least affected stock is Netflix right now. And then let's just go to the bottom. All right, Snow's down 2.1%, Goldman Sachs 2.53%, BABA down 2.58, Coins down 3.11. FedEx, I believe, has earnings coming out that are not supposed to be great, but UPS is the least affected stock. But let's go to the laggards. Okay, anything with 2%. So you got oil stocks down over 2%, Salesforce down 2.12%, and no surprise here, JP Morgan 2.73%, and Morgan Stanley down 3.42%. Sectors, least affected sectors, communications, and then we go to the worst is energy, basic materials, and financials. No surprise there, but the laggard. Good morning, Chief. And let's get into this data that's going to pop up in about a minute, but I can go over something really quickly. Um, Really quickly, I'm going to go over some news. What the news is, Credit Suisse leads your bank stock rout after short-lived SVB respite. Basically, what the Credit Suisse deal is, the bank share slid as the largest investor said it could not provide the Swiss bank with more financial assistance. So that's what's causing craziness in the eurozone, and what's really been pushing, because now that's causing panic over there, right? So, in one sec here, while I pull up the economic calendar. So let's look at the PPI. PPI month over month last time was 0.7, expected 0.3. I got core retail sales too dropping, but we have core PPI previous 0.5, expecting 0.4. So we have to see how that drops here and how it affects the market. I have the hourly chart. Well, that's not the one I wanted. Let's see if this PPI really does much. Oh, okay, just dropped. Whoa. So it looks like core PPI went down. Let's see if this is going to be positive for the market, right? PPI month over month went down to negative 0.1. Retail sales also went down. Only did expected a minus 0.3, you got a minus 0.4. So right now this market's not reacting to that. You can see you're not getting much volatility out of this news, which I said before, this is not in the forefront now. PPI, it's getting a little pop. Also, the New York Empire State Manufacturing Index was forecasted for a -8. It got a -24.6. So starting to get a little bit of more of a pop. Still not much volatility here. Real quick, on a candlestick chart, a review of the S&P. This 39.69.75 was resistance again yesterday. So the S&P with this financial weakness has not been able to get over that, right? You can clearly see that resistance, right? And we have a nice trend line. Now, what held yesterday, as we watched the market not do much with this news, is you can see I have a fib, right, from this high down to the low in the S&P. The 61.8, okay, the 61.8 retracement, which is 39.73. So I just put that on there for confluence, right? So that 61.8 retracement coincided with this resistance and this supply zone. So we reached it yesterday and sold off. Then you got that nice push at the end of the day, came back into this supply and rolled back over. Okay, and you can see on this chart the trend line here. So you got started here, hit here, hit here. So you got lower high, lower high, lower high, lower high, lower high. So this trend line has been hit 1, 2, 3, 4 times. So it'd be very interesting to see here. Now, if I put this against the Nasdaq, you'll see a clear difference, right? Like Fibonacci from this level came all the way up to the 50% retracement, and 61.8 is always the last line of defense. Couldn't break that, hit this key resistance level and rolled over, right? Well, let's look at the Nasdaq, right? Now the Nasdaq, I did a totally different fib. So the Nasdaq, I did have a fib from here, and the 61.8 was like right at this monster level I talked about. Well, that got broken yesterday, right? But you can see here, now I have a fib from the lows, right? So it's just the clear difference in the Nasdaq versus the S&P, right? S&P is so much more weaker because we ripped higher, right? We went all the way up to here, this 123.70 level, okay? We went all the way up here. So now I have a fib going from these lows to here, right? Now look where the market bounced. The market bounced right at the 50% retracement of this move up and a new demand zone. So that's just a clear contrast in the two markets right now, because we went up, it was selling off, went right in this demand zone, popped off right at the 50% retracement, and now it moved up, right? We're still below this monster level again. So the Nasdaq's in a little murky situation here. So that's just a clear contrast of the both markets, right? You can see that. All right. So let's move over to some daily charts here, just to see what we did yesterday. Yesterday was kind of nuts, right? So in the SPY, I still have this fib from here, right? So I'm going to get rid of this for now and just look at this chart, right? So we pretty much came up yesterday. We went all the way up to this resistance of 393.3, right? Also hit, what did we hit? We hit the 9 daily EMA. Look at these moving averages, the 100 moving average and the 200 moving average. That was the resistance in the SPY with this 293 level. Okay, clear resistance. Now let's put our little friends, the anchor VWAPs, on here. And where did we hit? Also the low, the anchor VWAP from the current lows, also acted as resistance. So you have a lot of confluence here. The 393.3 level, the 100-day moving average, the 200-day moving average, the 9 daily EMA, and this anchored VWAP from the lows. Okay, so we're below all our anchored VWAPs. Let's go back to the clean chart. Okay, so very, very interesting. I'm going to get rid of this trend line. All right, so that's the deal with the SPY. Okay, let's look at the weeklies and the SPY. You can see the SPY is just moving lower, right? The monthlies got 2 red candles, right? Let's just keep that in mind. All right, let's go to the Qs. You'll see the difference. All right, so in the Qs, this Fibonacci from here, from this low up to here, still holding, right? Where did the market go to? 50% retracement. Popped off of it. And look, yesterday, where did it go? Came up to this 298.26 resistance level. Also to the 20-day simple moving average. Okay, got support for the 9 daily EMA. Okay, just a different story in the NASDAQ, right? You can clearly see it. Now let's look at the anchor VWAPs here. Alright, so from the all-time highs was resistance yesterday. It kind of almost bounced off those anchor VWAPs from the current lows of October. So we're in between these two anchor VWAPs there. Alright, so that's the Qs. Now look at the Qs on a weekly. See, we're in this range in the Qs. We're just battling in this range, going back and forth, right? Let's look at the monthly. Look at that inverted hammer. Big selling last month, right? And then we have kind of like a doji this month. Makes sense, right? You can see clearly here too, and just divine profile on Thinkorswim. Most traded price of the last month, we're right here, right? And you can see this is each week, so each week is just inside, kind of just balancing, right? That's why there's a monster level in the NASDAQ that I talk about. All right, let's look at that Dow. All right, the Dow kind of came up, made like a little bit of a doji. Okay, still getting resistance from the 200-day moving average. Now the Russell's getting hammered because of those regional banks. Okay, popped off this support level, went all the way up here. Didn't find anything but just, the financials were up a lot, and then they kind of paired their with losses during the, they're still up for the day, but they definitely pulled back. So gonna watch the Russell. Now the Russell closed at 176. It's at 171 right now, 171.30. It is below this support. It's like right here, right now. It's the bottom of this range. Very critical part for the Russell. This is the Russell. Let's look at the Russell right now, just show what's doing. All right, so the Russell, notice that this is the most traded price of this week. We just broke it, and we're at these lows right here. So I'm actually going to set an alert here. I want an alert there to show me when the Russell pulls up there, because that might be a short there. All right, got to think those regional banks and the Russell and the Credit Suisse. So let's go triple head it. Monster. TNX made a big move down, caught support. Now today is down a little bit. So 10-year yield moving down. The VIX is a monster today. The volatility, you can see the large swings of volatility. We're at 28 right now. So we break this 28 and a half, it's going to be a crazy day. All right. The dollar making a big move today, right off this support, which is bad for commodities, bad for equities. Okay, so let's go back to the SPY. Now, the one thing that's been talked about now is the Fed funds rate, which was pricing almost in a 50% basic 50% rate basis hike in the next FOMC. Then all of a sudden it was like, we're going to pause with all this bank stuff. Now a 25-point basis hike is back on the table. So it's going all over the place. It's really going all over the place. So let's go into market profile. And let's map out what we're looking at today. Okay, so this is only the real-time trading hours, just like you would look at a SPY. Okay, but just in market profile. So this is the composite volume profile. Okay, so what happened here is we have a balanced profile. Okay, even in this craziness, 39.29 now is the most traded price of the week. So it moved lower. Okay, price right now is at 38.76. It's like down here, but we'll get to that. But yesterday, like I said, couldn't reach this resistance level, which is also the 61.8 retracement. So we talked about that. Okay, and yesterday was crazy. It got really volatile. And so now that we know that most trader prices move lower, let's look at what we're doing now, right? And you can see here on a 24-hour, the profile's got a lot of meat here, a lot of value, and then excess lower. Okay, now that we're below this most traded price of the week, that's bearish, and the overall market is bearish, but it's bearish in the short term. Okay, and you got two big demand zones down here. Okay, you already have lows down here that hit that and pushed up. This demand zone's from a long time ago. So you had two pushes up out of this demand zone because it's pretty much used now. So it makes the demand zone weaker. Okay, so let's map this out. Let's see what we have going on here. Okay, let's make this a little bigger. Let's get into this, what we're looking at here. Okay, now we're gapping lower. I just heard some large orders getting put in, so you can see it. We're pushing down right now. in the demand zone now. Let's break this out. You can see what the market's been doing. Okay. So you can see we opened here, and this was the overnight. Opened here, right? Had a lot of trade above this open. And then boom, selling. Look how thin the volume is. Look at all the single prints. Okay, that's emotional selling. That's emotional selling. Alright, we just hit demand. Look what's happening. Bounce. Bouncing up now. I don't know how big that bounce is going to be, but that's what we're doing. Okay, so now that we know that we fell off the cliff here, we're pretty much 100% net short. Even though the opened here moved up, but now everyone's short now. So we're going to look at that, especially at the lows. When you're at the lows, okay. So what am I going to look at here? Obviously, we have to go to the low. Here's the high of yesterday. Okay, here's the low of yesterday, 39.04. Here's the high of the overnight. Here's the low of the overnight. We just hit it, 38.65. Okay, number one thing is the gap. And this is a large gap, so they're just tough to read. Okay, but there's our gap fill. There's the most traded volume of the overnight is right here. Okay, so we're setting up possibly for a fade off the open if we hang out down here. Okay, we're setting that up. Now, anybody who watches me in the morning, we always talk about market generated information and what are the possibilities, right? Well, you just judge it on the gap. That's all you do. And I say this a lot, but we'll just go over it very quickly. Most bearish sign is a gap and go. Okay. Second is a failure to fill the gap, and then you go lower. That's bearish, right? Third is a fill the gap and then go down. So those are all bearish, right? But each one, this is the most bearish, this is slightly less bearish but still bearish, and then this is a little less because you filled the gap, but then it is bearish. Okay, there you go. Those are the three bearish. It tells us sellers are in control, right? But if we fill the gap and we start moving up into range of yesterday, then you know sellers aren't as strong. Okay, that's how we look at the gap. So now I'm talking about that fade, right? So let's set that up. Why is that a good setup, right? Well, everybody's short right now. We just hit a demand zone. If we hang out down here, which would be great for a fade, right? So because the most people traded here in the overnight. The volume's telling us that, right? So they're short. Some of them might have took profit right here, but that's fine. But you just know a lot of people traded here. And then what do you have here? All the emotional selling. So if we open and we go through this and hold it, I expect the gap fill at least. That would be your first target. Then you have all these single prints, right? That's all emotional selling. And these are weak hands in the overnight, right? So you could get a nice push right back up to here, which is the most traded price of the week and happens to be the most traded price of yesterday. And then we're right back in the middle. That would be a good fade, okay? And then what we want to look at on the short side is obviously, I don't trade this way, but like if you just gap and goad, obviously that's bearish. We can just go to the lows here, these equal lows here. But you got another demand zone right underneath here, so I don't want to short in the hole like that. So me, I would rather have this scenario. Like let's say you don't want to do the fade, right? Because it's a hard trade, I admit that. And you wait for this move. So let's say you get this move, and this is your first obstacle, is the most traded price of the week. So this is your barometer for your short. Okay, for me, if we come up here and reject, or come up here and reverse, that's a short. Okay, that's a short. Then you can target the developing the point of control of today, which I don't know what that would be. Okay, but that would be a nice short. And I don't know how far you get out of it, but it'd be a nice one. Okay, that's one, right? The next one would be is you wait for the top of this zone, because why? This 39.73, I've showed you before, it's 61.8% retracement, has been resistance plenty of times. So this is the ultimate patient play of a bear. You wait for it to come up here into this supply or this supply, and you wait and you wait. Even this doesn't mean anything if you don't build value above here. If you come back in, that's your short. And with the volatility today, we can make it all the way back down, all the way to here. That's what I'm looking at today. Okay, but the little line in the sand, the little line in the sand, is the most traded price of the week, and it was the most traded price of yesterday, and your gap fill, which is the low, 39.04. This is your little barometers. Okay, how you want to play it. Highest probability short is probably up here. You know, that's the highest probability short. And why is that, right? Why is that the highest? Because let's say we get a big run up today, and I'm not saying we do, but if you did, right, what's going to happen when everybody's long and we keep going and we go over here and we keep going, right? Everyone's going to see, because this lines up with the highs of Microsoft and Apple and Amazon and whatever. People are going to take profits here. And when people take profits, then new sellers come in, and that's why we move back. That's why it's the highest probability play. But you have to see what the underpinnings of the market are doing, right? Let's go right into the NASDAQ. Now, NASDAQ, like I said, different story. Doesn't have financials, okay? We have a nice profile here, very balanced. Okay, most traded price of the week is right here. That's about 121.30, let's say. Okay. We did break that monster level yesterday. We broke it. Came up here. Couldn't hold it. Couldn't hold it. You could even see the most traded price was right here. And in the overnight, look at that volume up there. That's a lot of volume. And then they got crushed. So that all that volume, all the people trading long up there got killed and got hurt, right? Price is right here right now. Right here. 121.55. So in the NASDAQ, I would say it could be a choppy mess, but the volatility is going to be tough, because you have this monster level here at the 122.22, right? And now you got the most traded price of the week here. Price is right here, right? So you can do a ping pong in between these levels. Could cause a lot of chop. So the NASDAQ can be very messy today with this in between these two big levels. So the ES to me is a little simpler to trade. Okay. And it really, like, for me, the NASDAQ is a little harder, because you got those levels are going to cause some choppiness. Now the volatility could X these out, because it's so volatile, could whip right through these, but anything in here I want to avoid. I'm not a fan of any of this. you know. So yeah, I'm not a fan of the Nasdaq today, because even if we make it above these monster levels right back up here, there's a lot of overhead supply. But then you're short. You got to go short through these big levels again. The only good one, the only great thing is if we come down and see the gap is small in the Nasdaq. It's a gap lower, but I want to see break this demand zone. We got to break this for me. Hold under here, and then try to go up here in the most traded price of the week and fail, and then there's your short. All right, and then if the volatility, you got the 100-day moving average, we got these single prints down here. We can make it down to these lows with the volatility. To me, that's the only play that I would 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 like to see. I mean, you could do this too, go all the way up here, and I'd still want it to break this demand, and still want to do that. So just even if we did that, I want to be only short if we can break this demand and hold under here. Okay. Remember, we just gapped down, so these are very difficult to read, not easy. Okay, and let's just look at crude. Crude just broke a demand zone before. Crude's very weak. It's at it's $69.32 a barrel is the low right now. It's about to open in 3 minutes. Okay, we closed here at the lows. Look at all that volume. It was the highest volume on the lows. Balanced though, right? It's kind of balanced. So what I'm looking for in crude is I'm hoping, now it's gapping really big down lower. It doesn't have much single prints. There's a lot of volume here. So if we do fill the gap, I would look to get into this supply zone to then do a short. That's what I'm looking for. I'm looking for it to come back here, because also crude has a nice trend line there too. So and you can notice the profile, a lot of heaviness up here, and now we're making less and less people, less and less transactions are happening down low. So when that happens, you're usually going to get a move back to at least the most traded price of today, or last yesterday, right? Most traded price of the overnight's up here. Now what I would love to see is the most traded price of the week come down and make it even here, right perfect in my supply zone. If that moves down, usually you get lower prices. That's what I want, because this excess is running out of participants coming lower. Even if we do this, that's even might be a good long to go back. I'd have to see that, but the move is definitely down, but we're extending really low, so it's kind of like oversold a little bit. All right, so that's what I'm looking at in crude. So I really have to see. It's going to open, and literally you'll see it come up right here where how it opens. You could get a push down lower and get those shorts trapped, and then you get a nice run up. So that's going to open in 40 seconds. You can see it. You'll see it when it opens. My guess, it will rip down. We can watch it together. My guess is we rip down, and I think we'll come back up. Here we go. It just opened right there. Let's see. Let's see what it does. So there's the rip down, just like I said, right? Let's see if they trap those sellers. Here in some large orders. Here we go. Look at that volume pushing right out at the lows. There's the push down. There's the push down. Can it go lower? And then I think it goes higher. Or it could just be very weak. Let's see. The volume's starting to thin out. Alright, in a sec, I'm going to show you guys some order flow real quick as I wrap this up. Just because I'm interested in this trade, but I have to see certain things happen. So right here is the order flow of crude. Let's just look at this. Let's see here. We're pushing down, getting nice volume. I'm telling you, I think this is going to whip. Let's see here, this next candle, and then I'm probably going to just watch this. This is how crude usually works. Right here, people are shorting the lows. And down here you can see the deltas, big selling deltas. Right now this delta here is not as much, right? And it's not saying that I we're gapping lower. So here's the gap, but it's not to say that this can't go lower. It's fine. But see how it's these sellers are getting absorbed. So this notice is not moving, right? See how it's holding this? That means they're getting absorbed. That's called absorption. When you got like sellers coming in and they're not moving lower, right? Here we go. See now the delta. Let's see here. And the volume is lower than the obviously, but let's see here. Coming up to VWAP now. Now, crude tends to correlate with the markets. The markets are off the bottom as well, so they're starting to push up a little bit. So we could see this. Okay, now you guys saw a big, like a little bit of a large buyer just came in. Volume's starting to increase. There we go. There we go. More volumes coming in. People who got short in the hole, right? Let's see if it can take this candle out. This is how crude works. So now you trap these sellers here. Now look at the volume pushing higher, right? All right. See, these sellers got absorbed to the lows here. You got a double bottom here. Next candle, right? Let's see what happens. Let's see if they got gusto here. Gaps up here, 71.28. Some sellers coming in now, but they could be weak. Now look at this delta here. That's so far the sellers are weak. Volume's weak. The only thing that I don't like about it is on the market profile, there's a lot of volume around 70.30, around here in the overnight. It's not single prints where there's emotional. They really built volume out, so that would make me a little that makes me a little hesitant of going long because of that volume that was built out. It was not just it wasn't. It's not like the indexes where they have a lot of single prints. So I'll keep my eye on that. All right. Well, hopefully you got that little lesson in crude. I wish everybody luck today. Give me a comment, like, or subscribe. I am really just gonna take this market in. You know my plan. You saw it. Okay. We currently are still kind of at the lows of the market. I am looking for the push down in the market, just like I said in crude, and to see if we can cross through the open. Okay, because everybody's short, probably going to take profit. But if it's super weak, we're going right into a demand zone. So I don't like shorting into that hole. I just don't like it. So, you know my plan. I'll try to make a video later if there's something to note. This volatility's high. Be careful. Again, stay green. Hopefully everybody gets green today. Stay patient, and I will see everyone tomorrow.